Good morning, everyone. Welcome to this month's educational seminar on an interesting topic of wealth management. Understanding RRSP, Registered Retirement Savings Plan. Today is Saturday, January 22nd, and I am your host, Roop Singh. I run a wealth management practice at RBC Dominion Securities. Today we will talk about some tips on RRSP. We will also cover why do Canadians hold an RRSP and how does it function. We have Amandeep Singh today as a guest. Amandeep is partner at Cloudiverse CPAs. Joining us today, he would be sharing some insights on the topic. Before we begin, if you have any questions for our presenters, please submit them via email that is on the screen. Hello, Aman. Good morning.
Good morning, Roop. Thank you for inviting me. And hopefully we can do these sessions in person in the near future as we come out of this pandemic.
Yeah, absolutely. I'm too looking forward to this. We have been indoors for close to almost 2 years.
Yes. In your conversations with your network group, how have Canadians adapted to the pandemic?
Aman, this is definitely an interesting question, and I do come across these kind of conversations with my network. Many Canadians are thinking about their retirement plans, to be very candid. That's a question that's on many Canadians' mind these days as they navigate the pandemic scenario. Many who have been putting off this decision for a while are now rethinking it. Others are even moving up their timelines. One of the primary concerns that Canadians have is not knowing, literally not knowing the answer to the question, how much should I save for my retirement? I have also observed that Canadians who may not have a proper plan or the advice are taking additional volatility risk in their investment portfolios, yet want to maintain the real fixed standard of living for the rest of their lives. All else being equal, this additional volatility risk can considerably increase the probability of not achieving their goals and ruining their retirement plans.
Oh, that's interesting. As you know, Roop, we are at that time of the year when Canadians are thinking about RRSP contribution. Now, as a wealth advisor at RBC Wealth Management, you must be having such conversations with your clients. Do you mind sharing what are some of the questions that you come across?
Yes, Aman. Every year in January, I have a practice that I proactively reach out to all my clients to see if they need any help or specific advice with the RRSP contributions. Yes, they are in conversations with their own accountants, but I work really closely with the client and their accountants to help them from a contribution standpoint. I also ensure, this is the time of the year where I spend time with my clients to review their financial and retirement plan. So typically the questions comes around their retirement scenarios, things that have changed in the last 1 year, how will it affect from a retirement timeline, etc. And usually during the first quarter of every year, I take this opportunity to update their plans to reflect the changes in their life stages.
Oh, that's a very good practice, Roop. You covered different stages of life for the client and give them the right strategy there.
Yeah. So, Aman, today we have, just to bring everyone on the same page, as I'm looking down the list of attendees, today we have listeners from various professional backgrounds. Some are business owners, some are incorporated professionals like doctors, dentists, and veterinarians, and some are technology professionals as well. Could you advise on how one should decide on considering RRSP contribution or buy investments in their private corporation? Let's address the elephant in the room.
I get that question a lot, and it's a great question. Thanks for asking. Roop, it depends. So there are many variables that may affect the decision. And in my opinion, over time, I see that an RRSP might leave the business owners actually with more money in their pocket than corporate investing.
So that is interesting. Could you please share your thought process behind this comment?
Sure. Basically, there are many advantages of using an RRSP before investing in your private company. For example, number one, the most common reason is that you can invest the same amount of funds outside your company within your RRSP in substantially the same manner that you would be able to do within your company. So there's no restriction there. And secondly, RRSPs are protected from creditors, whereas your company's investments are not, because whatever you invest in the company, if someone sues you, I mean, that investment is not protected. So if you put the money in RRSP, then it is protected from creditors.
So when you say creditors, Aman, so you're saying like banks and stuff that you have taken the loan, the businesses who have taken the loan to run the business, they can't come after your personal RRSP, but they can definitely, if they have to sue you, they can sue the business basically.
Yes, because the company is a separate legal entity. So they can only sue the company assets and investments. They cannot sue what is there in your, RRSP, in your personal RRSP. So that provides some protection there. And another important thing to mention here is that investing in your RRSP does not impact your company's ability at any point to claim the small business deduction. Yeah. And another point which comes to my mind is that if you accumulate too many passive assets in your private company, it can also impact your access to the lifetime capital gains exemption when you eventually sell the company. So there are a lot of advantages of investing money in RRSPs over investing it in a company.
Okay. And again, every individual, every scenario is different. So of course, we strongly recommend the audience to seek advice from their advisors or connect with us so that we can review this situation and provide specific advice to their situation. Yeah.
Definitely.
So, So, Aman, if, let's say, business owners are reflecting back on the last 1 year, and if, let's say, they have run their business successfully and they are finding that they have some excess cash in the company, how can they get the money out of the company to invest into RRSP? Should they withdraw like a salary or dividend, or like what is your opinion on that?
Roop, like the owner can do either, but, salary and dividends carry their own advantages and disadvantages. For example, while the salary that they receive from their company as an employee qualifies as earned income, that creates RRSP room, dividends that they receive as a shareholder does not.
Yeah.
So what happens as a result is that if they want to invest in an RRSP, they must pay sufficient salary so that they have the earned income necessary to generate the necessary RRSP contribution room. And when you talk, on the other hand, if they leave funds in the corporation for investment, then they might want to take that money out later in the form of dividends.
Okay. So, Aman, I just received a question from the audience. So let's say they are a professional, and they're asking is, as the professional life goes along, and they are doing really well. So if their income is going to increase in the coming years, so how does the future large income years impact the decision making of the RRSP contribution? Any thoughts on that?
Oh, future large income years. So they're expecting more money in the future.
That is correct.
Yeah, I see. Future increase in income may occur for a variety of reasons. For example, let's say the client may receive a raise at work, or they plan on selling a rental property at a significant capital gain. So, in cases where clients have moderate levels of income today, but they expect that an increase in the future, then building up and saving the contribution room or building the unused component to offset the large income tax year is a strategy worth considering.
Okay, so just to reconfirm what you mentioned here, again, this is case by case basis. This is not an advice for everyone.
Yes.
But ideally, what people do is if they're expecting that, okay, you know what, I have a personal property that I plan to sell next year, and I will receive a significant gain. So in order to reduce some kind of a tax consideration, or if let's say I'm planning to switch my career from one company to another company, and I know I will get kind of a huge bonus. So that in that case, I can leverage or I can use the previous contribution room and build it up for next year, so that I can pay that extra money down towards my RRSP by using the contribution room. Henceforth, reducing my taxes. Is that correct?
Exactly. Yes. That's right.
Okay. Aman, we have received another question. This is more coming from someone who just immigrated to Canada last year. So we have received. So if someone immigrated to Canada in 2021, and let's say they are making $120,000 of annual income, and they want to know how RRSP contribution can help them. So I know you have already addressed it, but if you could just elaborate more or give some facts to them for them to consider.
Okay, so around 120,000 income. Okay, so basically we can take some examples here in his particular case as well. So let me begin by stating some facts. So RRSP contribution limit for 2021 is the lower of the following. So it is 18% of the earned income, or $27,830. So, and if this person has not made any RRSP contributions in the previous years, then, the RRSP contribution room gets added to the contribution limit of 2021.
Okay.
Now, let me further explain with this example. So let's say he's making $120,000 in 2021, and let's say he contributes $15,000 to his RRSP. Then the CRA will tax him only on $105,000, which is $120,000 minus $15,000 RRSP deduction. So you will only be taxed on $105,000 instead of getting taxed on the entire $120,000. So that's the example in his case. So he can pay. I mean, he will be able to pay less taxes, but if he contributes to RRSP.
Okay. So just to rephrase, RRSP accounts help them to defer the tax, and they of course they won't be able to avoid the tax altogether. It's just a tax deferral until retirement, and that's why RRSP is especially popular with high income individuals.
Yeah, basically they can defer the tax until retirement, and when they are in a lower tax rate, like they can start withdrawing. So that way, the tax is deferred. Yeah.
So thanks, Aman, for explaining this in a very simple language as well as an example. Eligible Canadians making early contributions has proved to be very rewarding during the retirement. Like during the financial planning exercise with my clients in December last year, I'll give you a classic example. My client asked if their daughter can join in the meeting, as she got her first job in December. So after the meeting ended, the client asked the daughter that what did she learn, and she said, these are a few things that I learned. When you get the first job, it is great time to start contributing towards the RRSP. You don't usually have a lot of bills, debts, or other financial obligations. So of course, all the savings you can put towards the RRSP depending on the limit. And additionally, you want to start building the right saving habits early. And the secret to save early and save often is very important. Since you can keep contributing until the age of 71, that can give you at least 55 years or so for tax-free compounding. So I was very impressed with her response. And then, like any individual, when they talk about savings, they also talk about investments. Then I started asking about investment types and strategies.
Yeah, it always helps to start young, and then, you have a large runway, like you mentioned, like 55 years, right? So that's a very impressive family. I'm sure the family is in a high net worth category. I'm curious to know, what did you talk about the investment strategy in an RRSP? Maybe our listener may find value in this.
Absolutely. I can share here what I discussed with her. Definitely, these are not any hot tips that I would say, but there are various investment products and structures that can be used in designing an RRSP investment strategy. However, the important discovery process is the first step. I usually get to know the client who wants to invest into their RRSP account. And discovery process is not like a template. However, there are a few things that I definitely uncover, like their risk appetite, time horizon, are they taking any loan to contribute into RRSP or using excess cash in hand? How do they react to the volatility in the market? Do they have any preference or restrictions to specific industry, their past investment experience, et cetera, et cetera. So it's an ongoing process, but it's a very thorough process that I go through in a discovery phase when I meet with a client. This takes a few sessions before I design an investment strategy, and based on the global economy, the asset allocations are made. Then from the infinite pool of investment securities that I have access to, which could be exchange-traded funds called ETFs, mutual funds, stocks, bonds, money market securities, and all appropriate selections are made to reflect the client goals that are captured in the discovery process.
That's a very thorough process, Arup. I was enjoying listening to your process because it's very detailed, and I know that it can help many investors there. But I just looked at the time, and I guess we are approaching a close, Arup.
Yeah, Aman. Yes, but before we close, I just want to remind our listeners that RRSP contribution deadline is March 1st. Don't let this year's deadline sneak up on you. Make your contribution today or as early as possible. If you need help, reach out to us. You can also reach out to Aman. Aman's contact is also on the screen. Thank you, Aman, for your time and sharing some quick tips on RRSP. Definitely beneficial to our audience who are going through the process of RRSP contribution in January and February. Thank you again for joining us today.
Thank you, Arup, and thank you everyone for joining.
Yeah, this brings a close to our today's session, and we look forward to seeing you in the future sessions like this. Thanks. Take care.